Is Mike Sullivan. I'm a former IRS agent and teaching instructor. Welcome to my home office. I worked at IRS for a decade. I have worked thousands of cases. I have a whole team of former IRS agents, tax attorneys, and stuff. And I like to give people all the relative information they need to make informative decisions and to really educate you into what things that you need to know. I have, beside working thousands of cases, I've been on all the major news studios on TV. You can go ahead and look them up at 777irs.gov. What I want to talk to you today about is for you to understand the DIF score and what it is and how it's comprised. God, you don't know how many people call me and say, "Oh, Michael, you talked about the DIF score. What is it, and how does it work?" Well, I've been doing this 51 years total, and it's like knowing the formula of Coke 40, Coke, the formula of Coke 44. It's not a Colt 45. It's the formula of Coca-Cola. IRS doesn't tell you, but you know, after being a former IRS agent and looking at returns for so long, and looking at the returns that kick for audit, you really kind of get a good idea. And here's what the DIF score means. The return's got to make sense. In all reality, that's what it has to do. You can imagine in the last 51 years how many returns I've looked at. I can pick up a tax return and I can tell you in seconds if that return is going to be audited. Why? Return doesn't make sense. You can't keep getting losses every year on your return. You can't have them all end with zeros. And basically what the DIF is comparing your return to everyone else's return in that category. That's what it is. That's exactly what IRS does. IRS gathers all these algorithms all over the place, and it says, hey, in this dollar amount, in the scope of this gross income, adjusted gross income, and expenses, this is the norm. This is the norm. The norm ain't here. So if the norm is here and you have one flag, two flag, it's okay. Three flags, four flags. By the way, you may have these expenses, it's okay, but I'm talking about norms. Everything's about a norm. So actually they do norms actually in geographical locations. Like if I lived in South Florida, they know what the average interest is on houses, what business losses. They are taking all these metrics. As a matter of fact, you may not know this, listen to this. For refund fraud, they have, by the way, that cat is going to bring you just great luck. Cat wants an appearance fee. There's 242 filters for a refund, a fraudulent refund. IRS just pumps algorithms in this, and what they do is they get last year's data and change it, last year's data, year before that, so they keep fine-tuning it, and with the advent of AI, they're going to hone it, and hone it. So just remember this. Just remember this. IRS is going to audit anybody who's taking credits that they don't deserve. The computer program is spot on there. You're taking business losses, spot on there. If your tax return, you showed it to someone else's, does this make sense? Like you can't have businesses and only make $4,000 a year. How the hell can you do that if your mortgage payment is $2,600? So understanding your DIF score means what is the average person compared to your tax return doing? That's what it is. Now, like I said, it doesn't mean it's wrong, but it does mean IRS is probably going to look at that tax return. If you need IRS audit representation, ain't no one better than our firm. We know everything IRS is going to do well ahead of time. Anyway, I give you the information you know. I hope you know about DIF. By the way, it stands for Discriminatory Index Function Score. I don't know why they came up with that name. They did. Call me if you need me. Give me a subscription. I give you the information. You can send me a text, an email. I try to get back to as many people as I can. If you have an idea for a YouTube, always let me know. Thank you so much for the listen today. I appreciate it.